So one of the more popular questions in the mortgage industry is, what is a mortgage broker and what is a bank, or what is a direct lender? We'll start with a bank or a direct lender. That means that the loan officer or the originator or the person that you're working with actually works directly for the lender. They are lending, underwriting, and originating under the guidelines and the price meaning the interest rates and the closing costs, that specific bank or lender is offering. So that could be Wells Fargo, could be Rocket Mortgage Retail, could be Loan Depot, or many other banks across the country. And then you have mortgage brokers, where a broker is a loan officer or a mortgage loan originator that can use many different banks or lenders. They might choose, for someone that wants a lower interest rate, a bank for this purpose, but they might use a different bank for someone that needs lower closing costs. A little bit more choice on the broker side, and maybe a little bit more streamlined on the bank or lender side. I think there's pros and cons to being a direct lender and a broker. And really, it varies very drastically from lender to lender and broker to broker. You might get really great service at a brokerage. You might get really bad service at a brokerage. You might get really bad service at a direct lender, and you might get really good service. A lot of it is contingent on the quality of your loan officer or your loan originator. When you work directly for a bank is typically going to have one specific set of guidelines and the bank's parameters per se. For example, if the bank requires that your credit score be over 620 and you talk to a loan originator that works at that bank and your credit score is under 620, you're not going to have any options. Whereas if you work with a broker might have a lender that they typically use that requires over 620. But if your credit score is under 620, they might be able to go out and find a different lender that offers a program for someone with 580 credit score. So there's a little bit more flexibility with a broker and a little bit more rigidness on a direct lender or a banker's side. Some more pros and cons of a direct lender or bank versus a broker is that you're going to see swings in the market from lender to lender to lender. So for example, sometimes a lender might be really, really aggressively priced. So hypothetically, let's say that for a time, Chase Bank is really, really, really aggressive on loan sizes that are above $500,000 and a credit score above 760. And so there could be a window for 2 months or 2 weeks or 2 years where borrowers are really advantageous to end up with Chase if they fit that specific bucket. But the opposite can also be true, to where maybe for a time they're not as competitive on that pricing. And so you get those ebbs and flows more so with a bank or a direct lender because they have a specific subset of people in a different market that they are trying to appeal to or maybe not appeal to. And then on the flip side of that, the broker, again, can sort of go out to the market, and the broker has the advantage of competition, right? So there's many different, what you would call wholesale lenders, competing for that 760 FICO score borrower. So, you might go out and find the best lender that's able to offer that if they work with brokers on that side as well. So more differences between mortgage brokers and mortgage bankers. So one is servicing. In general, again, it's going to vary widely from lender to lender to lender. So for example, Wells Fargo most likely is going to originate a loan via Wells Fargo, maybe your mortgage banker at your local branch, and they're probably also going to service that loan, meaning that you'll make your mortgage payments to Wells Fargo. Now, it's also possible that they sell the loan off and that you make your payments to someone else. Pretty much across all spectrums, you're going to get the same product types. A 30-year fixed conventional loan, a 30-year fixed FHA loan, 15 years, and then some adjustable type products as well. Now, with a mortgage broker, almost every single time, whoever is lending the actual money itself is either going to then service the loan or they might sell the loan off to somebody else. And so whether you go through a bank or whether you go through a broker, it is possible that your loan's servicing gets sold, which means who you make your payment to. There's a lot of big names in the mortgage industry, and there's a lot of big names in banking in general. And I think most people, especially right now, you have a bit of a flight from the mid-size local bank to the bigger banks because it seems that there's a little bit more safety with the Bank of America's, Chases, and the Wells Fargos. And me personally, I've banked with Chase my entire life, and they've been great. Super user-friendly mobile app, good customer service. If I have fraud, I can report the fraud, and I do trust Chase, and I work well with them. So why would you trust a smaller mortgage company or a mortgage broker? And I think you got to do your own due diligence and you got to do your research. And I would encourage people to talk to multiple lenders and get a quote. When I say a quote, I mean have them pull your credit, provide your income information, have more than a 30-second conversation to where they're probably required to put on documentation what they can actually offer you. And compare that against a mortgage broker and research the mortgage broker and check the Better Business Bureau and look at their reviews. And Google and Yelp and these online review centers, if they're legitimate, they do a good job of vetting this stuff. If a company is getting a bunch of 1-star and 2-star reviews, you can't just hide those from the internet unless it's like one of these paid review websites. Google does a really good job at that in general. So I would encourage people to shop, get documentation that states what the terms of a loan are going to be, have them pull your credit, provide your income documentation. Because if you do that stuff and lenders or brokers or whoever it is puts it on documentation and then doesn't honor it, that's obviously a serious problem and you have a trail. So I would encourage you to do your due diligence, do your research, compare and contrast, and choose the lender and really the loan officer that you feel most comfortable with. It could be the best company in the world and you could get someone that doesn't sound like they know what they're talking about. I wouldn't use them either. And the same goes for a company that maybe they have mediocre reviews, but you really like the person. When you're trying to determine who to use as a mortgage company, whether it be a lender or a broker or your local credit union or whoever, it really boils down to two things. A mortgage is not an iPhone versus a Samsung fold-up phone. It's price, which is incredibly important when it comes to a mortgage. Don't let other people tell you it's not. Some will say that price isn't important. It is very important. It's the interest rate that you get. It's the closing costs that you get. It's your payment. It's do you pay private mortgage insurance or PMI? And if so, how much is it? And then it's the service. And that's kind of it. And so if you have someone that sounds knowledgeable, that has good reviews, people that have actually done business with them, and they're offering you a rate or closing cost that's lower than other lenders, then go with them. And I think for the most part, what you'll find in the marketplace is that the companies with the largest marketing spend, big commercials and sponsoring Major League Baseball and this and that, they typically have to pass that on via higher closing costs and higher interest rates. We try to run as lean as possible. We don't spend tons of money on outlandish water fountains in our offices and, unfortunately for our employees, major trips to Paris that are 5-star resorts, right? We try to pass on savings, provide a really good service and product, but with really low interest rates and low closing costs. I think in general, no matter where you're at in the purchase process, maybe you think you're 2 years out from buying a house, or maybe you're ready to buy, or maybe you're just seeing what the options are, where interest rates are at. I think the most popular typed in Google search is, what is today's mortgage rates? I think having a conversation with a loan officer that you trust at a company that you trust that has a good reputation, that could simply walk you through what your options are. How much savings out there? How much could you take out if you wanted to do a renovation of your house? How could you differently structure a loan to get the lowest possible mortgage payment and the best possible interest rate, and do less down payment or more down payment? Be dangerous by knowing what is available to you and shopping with multiple companies to where you start to understand what is available to you. And when you know what's out there and what your out-of-pocket expense is and your payment and your interest rate and all the stuff that comes along with that, you can make the best decision based on the information that you've gained. Have a conversation with us. We'll send you in the right direction. Hey, so if you liked our content today, make sure that you like, subscribe to the channel, and go click this video and watch more content, get more educated, and increase your odds.